I'm just pulling up the SPY here because this is interesting. We have the Fed meeting minutes this week. Fat Man Zoom, and this might spell some turbulence in the markets, or just a little bit of choppiness. Not that we're not used to this by now over the last 6-7 weeks, but the S&P 500 came pretty close to the 50-day moving average, or the SPY rather, the 50-day moving average at around 434. And we had some really solid last two trading days on Thursday and Friday, and I'm wondering if this could be the start of a decent move up. Every time we've seen it come down either close to or actually test the 50-day moving average, it's had a pretty decent run up after that. Now, obviously, it's been going up for a lot of things. There's been some of the heavier weighted stocks that have done well, that have carried the S&P up, while the rest of the market kind of seems like it's doing crap. And we've kind of talked about that a little bit as far as some of the epicenter type stocks that have really kind of taken the hit for the most part, and some of the stocks that are more affected by the Delta variant than others. But this will be interesting because there's been a lot of talk of moving up the timeline as far as tapering off the purchasing of bonds. There's also talk of moving up the timeline for raising rates, which in my opinion, I think that it makes sense to potentially start tapering the purchasing of bonds, only because it's an insane amount every month that gets bought up. And the economy is actually doing pretty good. Now, as far as raising rates are concerned, I think that there's definitely some key things that need to happen before we start to see rates go up. And one big thing is the employment rate. I mean, there's still a huge job demand out there, and businesses are having trouble filling up those jobs. So until that actually takes place, which we could see when the unemployment benefits kind of run out in September. So it'll be interesting to see how the Fed actually handles this during their meeting at Jackson Hole this week, which kind of plays into Jay Powell's favor a little bit more because of the Delta variant. They actually aren't doing this in person; they're doing it virtually. So this kind of, I would say, more than likely plays into Jay Powell's, more dovish sentiment, because this is still a problem.
Mm-hmm. Yeah, I think there's obviously two sides of this, and man, you probably are a little bit on one side, and I'm on the other side as far as like how this Delta variant plays out, or how just COVID in general plays out.
Yeah.
And I think that you're seeing this also play out in just like the public eye. When you talk about the Fed, you talk about Capitol Hill, and really like both sides of the parties. It's like, and who knows who's right? We'll figure that out. But I think that the one thing I'm interested to see is, like, I don't believe things move in linear fashion. I think things move like the market moves, where we're not going to see the trend stay the exact. Well, I don't want to say the trend. I don't think the rate, when you look at like jobs numbers, when you look at unemployment, when you look at like economic factors, I think while I will say the trend should go in the continual direction, I don't think it's just a straight line up.
Yeah.
And so things like the Delta variant happen, and quite frankly, you're seeing businesses pull back. So it doesn't really matter or to me, it doesn't necessarily matter what happens, how it exactly plays out. The response with businesses is what I care about more, because even if it's a big, like a non-issue, the fact of the matter is many companies have pushed back their stay at home. And so that's going to help certain companies, and it's going to hurt other companies, and it's going to mean different things for the economy. I'm just really interested to see what the fall brings and the winter brings, because quite frankly, I don't think that I think that there's going to be just some fear and uncertainty going into those seasons.
Yeah.
So we'll see what happens.
I agree. I mean, I think that we just heard from Goldman Sachs just on Friday that they're pushing back mandatory return to work until 2022. So there's that as well. I mean, there's so many factors here. I think the one key takeaway, though, is that we are going in the right direction. And so when does it make sense for the Fed to actually start making moves to come out of the emergency plan that they put in place. And I think there's some arguments that you can make for and then against. Obviously, the inflation conversation continues to come up, and that's one of the major reasons as to why. But overall, I think, in my opinion, that I don't think that the Fed's going to change too much or surprise anybody, at least significantly surprise anybody. If they decide to move up the timeline slightly, I don't think that's going to come as much of a shock. I mean, the market might have a 1-2 day response, but I don't think it's going to
Yeah.
be a big deal. But really, overall, if this does happen, let's just take the scenario here. If they do move up the timeline as far as raising rates and buying up or tapering off the purchasing of bonds, we know where to go. And I think that's important that you guys understand that. You're looking at more so value type stocks that are going to play favor here. The Verizons, the Caterpillars, all that good stuff. And obviously the financials too. The financials are going to be big. And even though that they've already run up, they've had a pretty decent pullback. And it may make sense to continue to start accumulating those in anticipation of, any kind of a rate hike or anything like that might come sooner than anticipated. But really, at the end of the day, we talk to you guys about this all the time. Is just having a plan. So we can speculate about anything we want, but if you know which way to go, if this happens or that happens, that's really how you're going to benefit the most. Not just trying to guess what might happen, but actually having a plan in place for what does happen. And I think that that's going to be the biggest key takeaway from the meeting this week, and then moving forward as well.
Yeah, two things. One is you should be, or I don't think anything happens before the end of the year. Like, given how businesses have pushed back till January, I think logically, now the announcement may happen, but I don't think anything as far as tapering is concerned happens until January at the earliest. At least if I'm the Fed chair, that's where I would wait till at least January 2022. So I wouldn't expect that. But the other thing I think people need to remember, whether you like it or not, a lot of what you hear on TV also is political commentary. Like politicians may say something on TV because they feel like they have to say something,
right?
Just not whether they believe it or not. They can say one thing behind closed doors, but they can also say publicly, like, hey, we should taper. And that scores them points to their constituents because they say, oh, well, I was pushing tapering. So like some of this is political because they feel like their constituents want them to say it, but they may be saying a different thing behind closed doors. And that's also challenging things when you deal with sort of the political environment, and certainly the Fed and what it does has a lot to do with the political commentary.
Yeah, absolutely. And I think that there was some talk about that earlier on when people, I guess, were quote unquote fighting the Fed. And we always talk about that's usually not the best way to go about doing it. And now it seems like Jay Powell's going to stay in his position because, I mean, frankly, I think that he's done an incredible job handling this whole situation, even though we've seen some of these inflationary numbers go up when it comes to gas and travel and materials and all that good stuff. Is it transitory or not? I think it remains to be seen. But so far, everything that the Fed has done and based off their research has been the right decision. So I don't think that there's anything to necessarily worry about as far as this is concerned. I think that we should be taking them at their word, at least up until this point, and just go with what the Fed's doing until they change direction, and then you change direction rather than just trying to guess it all of this time.
Yeah,
I think